For years, Bitcoin was, well, it was the wild, unpredictable ocean of the financial world, wasn't it? But something is definitely changing. The speculative tides are starting to calm down, and what used to feel like a risky venture into the unknown is now starting to look a whole lot more like a well-charted journey. Today, we're going to explore Bitcoin's voyage from the fringes of finance right into its mainstream heart.
And man, is it a fascinating story. Glad you're here for it. You're watching the One-Eyed Monkey channel, where tech, gadgets, and Bitcoin collide.
So you see Bitcoin hitting these crazy new all-time highs, and of course, the big question pops into your head, shoot, did I miss the boat? Am I too late to the party? And look, that's a totally fair question, but when you actually dig into the data, well, it looks like this story might be just getting started. You know, to really get our heads around this shift, there's this great quote from a recent Fidelity analysis. They said that, quote, Bitcoin is now anchoring in a more promising harbor of widespread acceptance. I just love that voyage metaphor because it's so true. It's not about just surviving some crazy storm anymore. It's about actually finding a safe harbor to dock. And that, well, that changes the entire game.
So who's actually on this ship with us now? Because let me tell you, the passenger list looks way different than it used to. Let's take a look at who's driving this whole shift.
Okay, check this out. At a glance, yeah, individual investors, people like you and me, we still make up the biggest slice of the pie. But lean in a little closer. Look at these other slices. You've got ETFs, you've got major corporations, even governments. Sure, a big chunk is still in old or lost wallets, but the real story here, the trend to watch, is the explosion of these new groups that honestly weren't even on the radar a few years back.
And that's the key takeaway, right? While everyday people are still the majority for now, the segments that are growing at lightning speed, that's the institutional investors and the big corporations. The so-called smart money isn't just dipping a toe in the water anymore. Oh no, they are jumping on board, and they're doing it in a huge way.
And wow, I mean, this chart just says it all, doesn't it? This shows you just how fast this is all happening. Just look at the US Bitcoin ETFs in less than a single year. The amount held by investment advisors and hedge funds, it just exploded between the first quarter and the last quarter of 2024. We're not talking about a slow, gradual change here. This is a full-on, pedal-to-the-metal acceleration. And if you want a hard number, here it is. Over 1,700. That's how many institutional firms jumped into US Bitcoin ETFs by the end of 2024. Think about that. This isn't just a few rogue funds taking a gamble anymore. This is a massive, broad-based wave. And it's not just the Wall Street types either. We're seeing huge companies, think Tesla, Semler Scientific, putting Bitcoin right on their balance sheets. Then you've got a major sovereign wealth fund from Abu Dhabi getting in on the action. And get this, even massive governments like the US and China are now huge holders. Yeah, mostly from seizures, but still. The point is, this ship is starting to get pretty crowded. So you got to ask yourself, right? What changed? Why are all these big players suddenly feeling safe enough to get on board? Well, a huge piece of the puzzle is that they finally have a map and a compass they can trust. Let's talk about how clear rules are guiding this whole voyage. For the longest time, the biggest problem was this thick regulatory fog. You just couldn't see where you were going. But now, that fog is finally starting to lift. And what's replacing it are these clear frameworks that are basically a compass for these big institutions, giving them direction and, most importantly, predictability. And this isn't just happening in one place. It's a global thing. In the US, they got rid of this rule SAB 121, which was a huge headache for banks wanting to hold crypto. Barrier? Gone. Over in Europe, they've got MiCA fully up and running, which means one set of rules for the whole EU. And then you look at Asia, Hong Kong, South Korea, Japan. They're all building out their own rules too. This worldwide move toward clarity, it's like a giant green light flashing for institutional money. Okay, so if regulation is the compass pointing the way, then the powerful engine pushing this ship forward at insane speeds, that's a whole new set of financial tools. And the biggest, baddest engine of them all is the spot Bitcoin ETF. And this right here, this is just mind-blowing. Seriously, stop and think about this for a second. Gold ETFs, they've been around for more than 20 years. They're a staple. And in just 1 year, 12 months, Bitcoin ETFs pulled in 75% of the assets that it took gold 2 decades to build up. That is just staggering. Here it is in black and white. 1 year for Bitcoin ETFs versus more than 20 years for gold ETFs to get to a similar size. That's not just growth. That's a fundamental shift in what investors want.
And it all happened because they finally got a product that was simple, regulated, and easy to access. And believe me, the toolbox is only going to get bigger. The next wave is already on its way. We're talking options on these ETFs, which opens the door for all kinds of sophisticated trading strategies. That in turn makes the market deeper and more mature. And down the road, don't be surprised when you see things like Bitcoin-backed loans becoming a normal thing at your bank. All right, so let's recap. We've got new passengers, a clear compass, and a super powerful engine. So where are we all going? What's the final destination? For the serious money, the big investors, the destination is all about figuring out where Bitcoin fits into a modern portfolio, and it's looking more and more like its role is to be a one-of-a-kind tool for diversification. And this is the big why. Take a look at this table. It shows how Bitcoin has moved compared to other big-time assets over the last 5 years. Just scan down the list. Low correlation to US stocks, low to international stocks, near zero with bonds, low with gold. What does that mean? It means it dances to the beat of its own drum. It doesn't just follow what everything else is doing. And in the world of investing, finding something like that, that's kind of the holy grail. So why is it so different? Well, it's because its price isn't driven by the usual stuff, like companies' profits or interest rates. Its value comes from totally different things, what you might call idiosyncratic factors. Tech breakthroughs, how many people are using the network. Plus, everyone's buying it for different reasons. For some people, it's a hedge against inflation. For others, it's digital gold. All these different ideas, plus its potential to be a safe haven in crazy times, gives it its own unique financial DNA. So when you put it all together, you can see the story of Bitcoin is really, truly changing. Those wild, choppy waters of pure speculation, they're starting to calm down. Now, look, the ship hasn't pulled into the final port just yet, but for the first time, it feels like this voyage to the mainstream is on a clear, steady, and predictable course. And that leaves us with one last, really fascinating question to chew on. As Bitcoin finishes docking, as it becomes just a normal part of the financial world, what's next? What other part of traditional finance will it and the tech behind it start to explore and maybe even disrupt? The voyage, it seems, is far from over.